What I'm going to do in this video is walk you guys through the difference between market trend ignorance and market trend analysis. And I don't want anybody here in this room to be ignorant of market trends, because they are the #1 step in any trade. And it was really interesting when I was scanning through the charts, I noticed that gold and Tesla have kind of an interesting similar scenario. I'm going to start with Tesla. Now, Tesla is not a name that typically we're going to talk about as futures traders. I know a lot of you are very interested in Tesla. Therefore, Andrew Left and Citron Research coming out and telling everybody that they are now long Tesla for this quarter, by the way, for this quarter, is kind of interesting. Pretty good chance that Left and Company are long down at or just below 260. So now that the news is out, they made an instant $30 a share on the fact that, by the way, Citron Research, they can move a market, as we can see right here. Is Tesla, though, simply bouncing off? Andrew Left or no Andrew Left? Is Tesla simply bouncing off an oversold level? Absolutely. There's a really good argument here that we're still in chop. Take a look at this Darvis zone right in here. Really good argument that we're still in chop. So that means, for those of you that are wondering, is there a Tesla short coming up? I think so, right around that 200 simple moving average and the Darvis level. So take a peek right here. Oversold, oversold. That is the argument that we're making here. Why? The market is in chop. This is where we're likely to exhaust. There's technical reasons, there's previous price-based reasons. And the only way a trader would do this is if they understood the underlying market trend. So day traders here, have fun with this candle. Great day trading candle. Do you buy into it? Only if you're aware that your upside target is going to be somewhere between 306 to about 318. Now, what does that have to do with gold? Right back to market trends, my friends. Go to gold here. I'm not saying we're having a Tesla moment, but it kind of looks very similar. Think of this as the big candle up. And then here we are, once again, going up into an oversold level. 1, 2, 3 different Darvis levels up in this area. So previous levels tell me, hey, this could be a pretty good resistance level because we've stopped here. We have previous support and resistance here before. Now, it would have been, better if this 200 weren't up at 1263, but rather maybe 1243. That would have been great. So this is not even as good a zone as the Tesla one, right? But this is an overbought market. Oversold down here, oversold fade by. And we talk about overbought short. Same thing we talked about yesterday. So if market trends are the first thing you stop to do every time you trade, you're going to be able to better understand why you would buy something and why you would sell something. A lot of traders ask me, and this is a great question, and I'll explain it right now. Ask me, Rug, why would you not buy that candle? Well, first of all, the market trend is choppy. It's sideways, okay? It's a kind of sideways market. That's where overbought, oversold becomes a conversation. If you want to buy an up day in a choppy market, it's not that you can't. You will only do so in shorter term time frames. You'll do so much more nimbly, remembering that there's not a dominant psychology, otherwise there would be a trend. So there's no dominant psychology. Therefore, you want to stay nimble, you want to stay short term, and you want to remember that tomorrow could be a down day. Heck, today doesn't even have to finish up. So rather than getting roped into the momentum, if you are a bull, you do so short term. But if you are a big picture bull, like I am really now, big picture meaning slightly longer term, down in this area, really starting at around 1200 all the way down to 1180, I'm a buyer, but not a buyer at 1240. In fact, 1240 is more like resistance, overbought resistance. And the only way you would know that is if you adhere to market trend analysis as the first stop. Whether we're looking at a 1-minute chart or a weekly chart, it doesn't matter. Market trend analysis has to be the first stop. So I thought this was kind of a neat juxtaposition of two charts that kind of have a similar vibe about them. Choppy markets heading higher, and whether or not it makes sense to be long, or whether or not we're just approaching a zone where increasingly I would become bearish. So let the bulls drive the market up here, just like the bulls could drive the market up to 1236, 1240 on gold. Let them drive it up there. But once we get here, this is where the short sell is waiting.